Hey everybody, good to be with you this morning. My name is Brent Moore, sitting in for Kevin Horner, who is he's on his way to New York for one of our workshops. So I'm sitting in this morning, but I'm glad to be here. See some familiar names in the chat. Glad to have you here. And if you're watching on a recording, hey, we're glad to have you here as well. I am joined by Scott Thompson in the chat, helping me out. So as you have questions between Scott and myself, we'll do our best to help you out with those. Do my best to keep up with those questions, and Scott will do his best as well. You can follow either of us on X at Brent Moore CS, at Scott Thompson CS for additional content throughout the day, throughout the week, and so check that out. Glad to have you here. The information today, though, is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And we'll look at individual stocks today, but those are not recommendations. Paper Money software application is provided for educational purposes only. And remember, short options can be signed at any time up to expiration, regardless of the in-the-money amount. Past performance is no guarantee of future results. And Schwab does not recommend the use of technical analysis as a sole means of investment research. All investing involves risk, including potential loss of principal. So there we go. And let's see. We're not going to deal with ETFs today, but if you are interested in ETFs, tomorrow's session, that's Friday's session of Trader Talks, actually does deal with ETFs. So you can always check that out as well. What are we going to do? We're going to do basically the same thing that we do most days in this market, and we're going to look at the current market. In this web class, we're going to look at the current market, look at different sectors, and just see what's happening in the market here, trying to get your day started off with the news. So here's the SPX. This is the S&P 500. Just to orient yourself, by the way, everybody, I have a 20-day, that's the red line, and a 50-day moving average on the chart. You can use your own moving average. There's no standard set of moving averages. These are both fairly common moving averages that people use, the 20-day more short-term. And you can see we dipped a little bit below that on that on the S&P 500 recently. And in fact, you can see it kind of dipped sort of, my line's not perfectly straight here, but that would be kind of an area we bounced off here and here, a little bit of a support level. And so we'll see. This, I think at this point, we'd consider that a support level, but we held the 20-day, so we'd probably consider that at this point, a key level, even though we've shown that we can break through that. But the general trend is held despite the fact that we dip down below that. This general trend over here, it's been tested several times. There's a test right there, big pullback. Here's kind of a little bit more flat, not quite as big, but a pullback. This is a test of this. But I would not call this a broken trend at this point, and therefore trend traders, now not everybody's a trend trader, but trend traders would probably say, look, if the trend is going up, we're more likely going to try and ride that trend. And so that's a 6-month graph with each candle representing one day on that. Now, if we zoom in and look at this morning's open here on this, let me just do this. Let me switch here and go to let's just do a 5-day, 5-minute, and let me zoom in here. So here's our open. Here's the pivot point. Okay, that's the purple line. Let me zoom in just a little bit more. Okay, you can see that a little easier. Here's the pivot point. We can see we've had a nice gap up. Opened up. Now this is the first 5-minute candle of the day. We opened up higher, and the momentum is all up right now. Now, it's not just going to go up constantly. At some point, we'll have some pullback of some sort. But right now, that's a strong open, folks. That's a very strong open. Now, why is it opening up higher? There's obviously a lot of reasons why it could be. President Trump announced new tariffs on semiconductors and chips. That doesn't sound that like that's likely to drive the market up a whole lot. But keep in mind that there's just been a lot of upward momentum in the market. Let me go back to the general market. And the news that any news that people find questionable, the market has kind of enveloped and just moved forward. For example, last Friday, this is last Friday's candle. Again, I'm going to zoom in just a little bit so you can see a little easier. Gap down, went down. We had an ISM manufacturing that was poor. We had a jobs report, a non-farm payrolls report, which not only was bad for the main month it was reporting on, that is July, but it was actually a revision bad for June and May, and that just whacked the market. But you know, the market just like a boxer getting knocked down, got right back up on his feet and has resumed its move up. So that's the S&P 500. Let's move on and let's look at how some other, here's the thing with the S&P 500, and I posted this on X yesterday. The S&P 500, in terms of breadth, 2% of the S&P 500, okay, so that's 10 stocks, okay, 10 stocks in the S&P 500. There's 500 stocks essentially in the S&P 500, okay? 2% of those, 10 stocks, make up 40% of the market cap. 2% make up 40, and why does that matter? Because it's a market cap weighted index. And when you have a market cap weighted index, then the ones with the biggest market cap are the ones, that's what determine what the index price is or the index movement is. So 2% make up 40% of that. So in fact, you can actually see that if you want by going to the Market Watch tab, clicking on Visualize. If you're on that S&P 500, you can see these are the big, if you look at the biggest stocks here, the size of the boxes here represent the market cap. So here's NVIDIA and Microsoft. Here's Apple, okay? And here's Alphabet, both both classes of shares there. Here's Meta and Amazon. So you can, and there's Tesla. So this is kind of showing the representation of those big companies. You can't do that, by the way, just as a quick aside, you can't do the same thing on the Dow. You can, in a sense, there's 30 stocks, but the Dow Jones Industrial Average is not market cap weighted. So the size of these boxes don't represent how big an impact they have on the performance, the ultimate performance of the Dow. The Dow is a price weighted index. In other words, any company that is priced higher, so if it's a $500 per share company, it's going to have a bigger impact than something with a $100 per share company. So it's kind of weird in that regard. It's different. It gives you a little different view of the market, but that's one reason why over the past, say, year or two, the Dow has underperformed the S&P 500 because some of these big market caps have outperformed the rest of the market or a lot of the market. And that's not, and it's because the Dow isn't weighted the same way. You're not seeing the same performance. Another way to look at this real quickly and talk about market breadth is the S&P 500 equal weight. This is just kind of saying we're not going to, those 10 stocks, that 2% of the S&P 500 that are the big market cap aren't going to count for 40% of the SPX. They're going to count for 2% of the SPX. And all the other stocks, even the smallest of the S&P 500, are count equal. Well, you can see the general trend is still up. but there are clearly difference in performances in these two indexes there. Okay, so let's move on. These are ways of looking at market breadth. In fact, let me give you one other quick way of looking at market breadth. This, and you can copy this symbol down if you want, $SPX A50R, okay, kind of a mouthful, $SPX A50R. This is the percentage of companies in the S&P 500 that are above their 50-day moving average. Well, so the 50-day moving average is irrelevant on this chart, but this is giving you the percent. 56% are above the 50-day moving average, which is kind of in this intermediate term moving average. You can see we were up at 80% about a month ago or so. So it's clearly even though the trend of the market has continued, the breadth of the market has flattened out a little bit on that in terms of its performance there. Okay, so let's go forward and let's move and take a look at the NASDAQ here, because it's going to look very similar to the S&P 500. Here's the NASDAQ chart, again, dipped below the 20-day moving average, still well above that 50-day. We haven't tested that 50-day in a long time here. At some point, that'll happen. You know, I don't know when, maybe a few days, maybe a few years, who knows? I don't know when that's going to happen, but the 50-day has remained untouched. In terms of today's action on this, let me just pull this up and let me pull up a pivot point on this and we can see kind of a similar thing. This is just a 1-minute chart. When I was looking at the SP 500, I was looking at a 5-minute chart. Shows similar thing, couple minutes of pullback, but moving straight up past R2 level. Okay, so we'll see. When we have this, by the way, when we have this level, if you're really looking close, and a lot of longer term traders, will, not longer term, intermediate term, a lot of traders don't even look at this intraday chart, but you know, maybe you want to look at it. You can look at this as a potential support level. We'll see if it would bounce. Can we hold this level? That'd be kind of a key level intraday on this chart here. Okay, let me go and let's move forward here. Yeah, these are simple moving averages. So by the way, let me pull up small caps and talk to moving averages here for just one sec. There are a lot of different types of moving averages out there, folks, you can use. I use simple moving averages on this chart here, but let me just kind of give you just a quick overview. If you use a simple moving average, it's taking whatever the length of the moving average is, say a 20-day moving average, okay, which is in the red, and it weighs each of those 20 days equally. You could do something like an EMA, an exponential moving average. And if I do an exponential moving average, it weighs the more recent data more heavily. So it's gonna move more quickly when the stock moves. In fact, one way I kind of view it is a 20-day SMA is probably equal to something, I don't know exactly, but like a 15-day EMA or something like that. It just effectively shortens the moving average. Some of you are familiar with something called like a whole moving average. And a whole moving average is even quicker than the EMA, okay? So essentially you can do something pretty similar, it's not exactly the same, of doing an EMA or a whole moving average or something like that, just by shortening the length of your primary moving average, okay? So it just kind of moves it that way. Okay, let's move on. This is the Russell 2000. Similar, but the NASDAQ and the S&P 500 were flirting with all-time highs. Not the case. We've had a nice trend up. This one actually bounced off that 50-day. Remember we said we weren't even close to touching that 50-day on the others? The Russell 2000 small cap stocks actually jumped, bounced off that 50-day moving average. Okay, a little bit more of an intermediate trend there. and still showing strength in there. What are we seeing in terms of the market, in terms of the VIX? So the VIX has calmed down. Remember I mentioned that non-farm payrolls report here on Friday? Well, the VIX goes the opposite direction of the market, typically, and that's what it did on Friday. It jumped up all the way up to the low 20s, well, settling down a little bit here. So that is the VIX there, okay? That is the VIX. So let's go and let's look at, I want to look at some other things, and because I want to see how like interest rates affect the markets here. Here is the TNX, which is the 10-year. Okay, this is the 10-year yield. Divide it by 10, and you can get the interest rate. Okay. By the way, just fun fact, or maybe you'll find this of help. If you want, so this is the interest rate would be like 4.22. I moved the decimal point over. But if you take the symbol and put in a divided by 10 after it, you can do this on any stock if you want to do that. What it's going to do is you can do mathematical equations, so to speak, here on this. And it does the math for you, in a sense, okay? In fact, I did a comparison chart the other day. I did a video about a week ago, I guess, on X, comparing the TNX on the TNX to the Fed funds rate, okay? And I put them on the same scale. Well, how did I get the percentage on the same scale? Well, I had to use this little function here to get this to show the true interest rate on there. But you don't have to do that. You can just use the TNX colon CGI and come up with that. So if you just do TNX colon CGI, you got that. You can see a substantial drop in that interest rate. Big drop after that non-farm payrolls report. Why? Well, look, if employment is suffering, if the labor market is struggling, it kind of almost forces the Fed's hand in terms of lowering interest rates. Now, there's not a perfect correlation between the 10-year and the Fed funds rate, but still, it does lower rates there on that. Okay, so let's do this. Let's look at that Fed funds rates. Before I do that, let me just mention, Rita says, looks like the TNX has a bear flag. Yeah, so what are we looking for on that? This is kind of this, and it's not, I'm not sure. Often a lot of traders won't even do like technical analysis on this isn't an equity, right? This is an interest rate. So some traders won't do that. But yeah, this kind of looks like a little bit like a bear flag. So we'll see. Bear flag, we'd be looking for a breakout right there to continue the trend. But it looks like about this 4.2% level, okay? Seems to be an area where it's kind of struggled going down south of. So we'll see on that, okay? We'll see where that goes from there. If you do want to bring up the Fed funds rate, you can use this symbol, Fed funds colon FRED. If you do that though, in fact, Janelle asked me the other day, I think Janelle's in the chat here, appreciate you, Janelle, asked me, how do you do this? If you do that, you got to use a line chart though. It's not going to show if you're using a candle chart. So you can just click on appearance, make that a line, click on apply, click on OK, and that did not work. Why is that not working? Let me go out a little bit farther. Let's go 3. I guess you got to go longer term on this. Okay, let me try this one more time. Appearance, we're going to do line, apply, click on OK. 9 months. Why? Hold on one sec. Let me give it one more shot here. There you go. Okay, you got to go long enough term there on that. Okay, so you can see the Fed funds rate, how it increased. It's still fairly high there for short. This is short term, right? And still, that's what some traders are looking at as kind of like scratching their heads a little bit about how high the Fed's fund rate is compared to some of these longer term rates. And so that's one reason why people are going, hey, Fed, you need to lower. They have their own reasons for not. They're concerned on the inflation front a little bit, maybe on that, but we'll see. Odds are right now, according to Fed funds futures, that we'll see a rate cut in September. Okay, let's move forward and talk about some stocks and things in the news. If I look at, say, the SOX index, this is the semiconductor index. It's had a huge run up, okay? It's pulled back a little bit, but there are but you can see what's this been driven by. A lot of this was driven by NVIDIA, okay? Nice run up. NVIDIA didn't really have the pullback. What had the pullback? AMD had a pullback. AMD had earnings the other day, okay? A couple days ago, had earnings. You can see what AMD did. It dipped, but this has been a nice, the market didn't like the earnings, okay? So here was earnings. It dipped. This is a big semiconductor company, chip manufacturer. And so this kind of affected the SOX. It's a big part of the SOX, not as big as NVIDIA, but it certainly affected things. But here's something of interest I noted as I was kind of looking at this company. If you look at the news on this, very often when a company has a bad earnings, analysts pile on. They just attack the company in a sense, and the stock just suffers on this. But look at this. Here's Raymond James. And I've got oh, come on, let me move this. Oh, okay, here's the news. Okay. Raymond James has, and let's see, that one's Baird adjust price target to 175. This is after, okay? This is news of yesterday. This is after the earnings, okay? Baird adjusts price target to 175 from 140. PNB Paribas adjust price target to 220 from 150. Okay. Seaport Global adjust price target to 190 from 135, and so on. I'm not going to read them all, but the price targets are getting adjusted. So for most companies, I would say when you have a bad earnings, the price adjustments go south on you. They go down. For a whole slew of these, the price adjustments are going up. So in a way of interpreting that, and it's probably not the only way of interpreting that, is, hey, this may be by some considered to be a buying opportunity for AMD after it got, well, it's a little cheaper now than it was a few days ago. Bullish on the semiconductor, bullish on AMD perhaps, and possibly taking advantage of that as a buying opportunity there for you. Okay, so AMD is one I just wanted to point out to you. I thought that was of interest here. Here's another company that I think is of interest, and that is Apple. Okay, so Apple, huge move up on Apple. Now keep in mind this. Remember the news I kind of read to you at the beginning. I said President Trump announced a new tariff on semiconductors and chips. Well, that was a huge problem. It has been a huge concern with Apple because a lot of their equipment and stuff is, and just not just that, but overall tariffs have been a concern for Apple. Well, come yesterday, Apple announced a $100 billion investment in the U.S. And planning on $600 billion over the next 4 years. Okay, they announced an American manufacturing program, bringing more of Apple's supply chain into the US. Well, President Trump also announced, he said that in addition to the 100% tariff on imported chips, but not for companies that are building in the United States. Well, the investors have reacted very positively to the news. Okay, they've reacted very positively to the news on Apple. So Apple, nice bounce up there. So there we go. So that's Apple. Nice big move on that. You can see that. Let me just look. We were looking at semiconductors. Momo said, what about Micron? They're a semiconductor. Yeah, they've underperformed. When I was saying that SOX index was doing really well, a lot of that was driven by NVIDIA and AMD, not so much Micron. Okay, there's another one there. And so there we go. Now let's move on. Other companies in the news. Well, here, let's look at Eli Lilly. Not so hot, right? This is based on earnings, okay? This is based on earnings. And so I don't know the full story on Lilly, but the market doesn't like it, right? I haven't read through the earnings report, but the market didn't like it. Okay, so that's sometimes you can see the headline numbers on this, and in fact, here's a headline. I'm going to read you a headline on Lilly, and you tell me what you think the stock is going to do. Headline in Lilly: Eli Lilly hikes 2025 outlook, tops quarterly estimates as Mounjaro and Zepbound sales soar. Okay, so if I just read that to you, what would you think? Probably not this. That's why you got to kind of let the market tell you, interpret some of these news reports for you. There's something that the market doesn't like. You can go through the news on this, if you want there. And so there we go. Let's look at other ones in the news, other companies in the news. Oh, you know what? I want to go to earnings here. But there's actually one other company before I go to earnings that I'm kind of going a little scattered here on chip makers. I apologize on that. One other that I want to point out is Intel, which is clearly outperformed. But in the news, President Trump actually called on their CEO to resign. Okay. It's down a couple percent, which given the volatility of Intel, maybe, you don't almost expect it to be more. Intel has been underperforming for years, honestly, in the chip space. Again, not enough. It shows you how much that SOX is weighted towards NVIDIA and AMD, especially NVIDIA, versus Intel and Micron when you see that. So there we go. But let's check out earnings here, folks. Let's check out earnings. What is today? Today, I should remember, it is my anniversary. So it is August 7th. Here's Lilly. What's coming up here? This is just, by the way, S&P 100 stocks. I have this limited just so we can see some of the bigger names. But you can see, big names coming up. Nothing compared to what we saw last week, where we had all these Mag 7 stocks last week. Cisco, John Deere, Home Depot, Lowe's, Target, those are some bigger, especially Walmart, maybe. That's coming up that's a couple weeks from now. But we don't have the Apples and Amazons now. Now, on the good news side of things, 81%, I think it's 81% if I remember it correctly, of companies have beat on their, was it rev? Oh, now I can't, I shouldn't have even said. 81% of S&P 500 companies have beat on earnings. S&P 500 companies have reported and beat on earnings this earnings cycle. That's good. Okay. Now, don't expect that it's, above 50% is good. No, typically most beat. Okay. But so far, it's been a pretty positive earnings season here, which is probably one reason, not probably the only reason, why the markets as a whole have held up pretty well on that. Okay, let's hit up on it. So we talked about earnings. Other ones, Lilly came out this morning. The only other one that came out is kind of S&P 100 this morning is ConocoPhillips, and it's off just a little bit. Okay. Oh, thank you very much. Thank you very much for the happy anniversary there. So I want to just kind of shift gears here to looking at these stocks and talk to you about kind of looking at sectors and upgrades, downgrades. Okay. So in particular, good question. Thea said, what's wrong with Fortinet? Okay. So this is FT&T. They were downgraded. FT&T, big mover in the market. This is a large company. Look at the gap here on Fortinet here. KeyBank analyst Eric Heath downgraded Fortinet from from overweight to sector weight. It's kind of funny the names these give. Some companies some analysts go buy, hold, sell. Some say overweight, underweight, equal weight. KeyBank evidently does sector weight, overweight, right? So they went from overweight to sector weight. Piper Sandler downgraded Fortinet to neutral from overweight, okay? With the price target down to $90 from $135. So their price target was up here. It's off my chart. Down to $90, which is still above where we're currently at. Rosenblatt analysts downgraded Fortinet to neutral from buy. There's a piling on effect that happens when one analyst downgrades, very often many other do. Of course, it coincides with the earnings wasn't good, and Fortinet got hit pretty hard here. Another downgrade, by the way, in the market. Big company, Caterpillar, selling off today, down almost 2%. Okay, down almost 2%. Downgraded, this is Morgan Stanley, downgraded Caterpillar to underweight from equal weight. Okay, so that's another kind of mover on the market. And so upgrades, AMD, I already mentioned AMD. I mentioned a lot of the price target increases. Well, DZ Bank upgraded AMD as well. Other ones, I'm looking for big names here. I don't know. Those are the big names. Maybe Lyft. That's a company everybody knows. Lyft upgraded. How's it doing? It's up 2%. So upgraded by Roth Capital Analyst to buy from neutral. Okay, so let's look at some sectors. And what I want to do on sectors is I'm going to use a chart. And Kevin shared this chart with me. I love this chart. This is a relative strength chart. Okay, so before I do that, let me just mention relative strength here. Relative strength is simply a measure of how a particular company is performing as compared to something else. That something else is, in our case, the S&P 500. Okay? So this is a relative strength line. If this line is going down, if it's sloping downward, it's underperforming the S&P 500. If it's sloping up, it's outperforming the S&P 500. You can't just look at the chart and say, oh, it's going down, therefore it's underperforming, because maybe the S&P 500 is going down even more. And if the S&P 500 were going down even more and the stock were going down, this line would actually be headed up there. Okay, so that's the relative strength there. Look at this, look for the slope of the line there on relative strength. So let's do this. Let's go over and do sector relative strength. And I'm just going to maximize the cells so you can see them a little bit easier here. Okay. And here's the different sectors. Here's energy. Okay. So there's no price target. There's no price on this. This is all just sector relative strength as compared to the S&P 500. How's energy doing? Well, energy has been going down. Okay. The relative performance has been going. It's been underperforming the S&P 500. Materials, underperforming the S&P 500. Industrials, it was actually doing pretty well and outperforming until lately it's dipped a little bit, okay? Underperforming of late, okay, of late. Discretionary, not doing spectacular. Staples, not doing very good. Maybe the last few days here. This is a 6-month chart, so that represents a few days worth of time. Doing healthcare, not so good. Okay. Finance, not so. How can everything be underperforming? Well, keep in mind this. The S&P 500, as I mentioned before, and as everybody knows at this point, is market cap weighted. So those sectors that have the bigger market caps, such as the one with the biggest market cap of all, Infotech, going up actually kind of influences the whole index. So that's why most of these sectors can actually be underperforming. It's not just half going up, half going down. Infotech has been spectacular though, okay? So this is this. Now, question, Beauty at its Best says, is there a way to check the relative strength of a specific industry? Yeah, you can you just need to get the symbol in there. So if you click on the gear, if you click on the flask and go to your relative strength, edit it with the gear and change the symbol from SPX to whatever you want to put in there. You can put an index, you can put it against an individual stock if you want. Okay, your choice. Traditionally, people compare against the S&P 500. Okay, so Infotech looking pretty strong there. Let's move on. Communications doing pretty well. Communications is another one of the big, I think it may be the second largest market cap sector in the S&P 500. Well, it's outperforming. Hence why the S&P 500 is doing so well. Utilities, real estate, definitely not. There you go. Okay, so there you go. Let me go back to our normal charts and just talk about this. I'm going to finish up with this the next few minutes here because I'm about out of time. If you're looking to trade, you're a trader, for example, and you're looking to trade, there's a lot of different ways to do this. For a technical trader, which is kind of what we focus on in this webcast here, Trader Talks, generally we're kind of on the shorter term in things, not long-term investing sort of things. Often traders will use technical analysis and they'll focus on things such as, what's the trend of the stock? Okay. What's the trend of the stock? What's the, what's support and resistance look like? Okay. What's the momentum of the stock look like? Okay. Those are kind of three general categories that people trade. Some traders just go, I don't care about some of this other stuff. I'm just going to look at the trend. A lot of traders will kind of prioritize and say trend is number one, but we're going to say trend, support and resistance, and momentum. Yeah. You can use what we did as a starting point with those sectors. When we looked at relative performance on these sectors, and you can just pull up a relative strength chart here on this. And you can see how, look, NVIDIA's done great, okay? You can use that as a starting point. Or you can use the news as well. Here's AMD. What's AMD been doing? Relative strength has been outperformed. What's the trend been doing? Well, trend's been going up, right? We had the little hiccup there a few days ago. Trend's been going up. Support? Yeah, probably some support down here. Trend. Support. Resistance? I don't see significant resistance. We had a high here, but anytime a stock's trending up that it's not at its all-time high, you're going to have something above it. Momentum. What's the momentum do? Well, momentum you can throw on another indicator if you want. Let me throw on, say, an RSI. Here's my RSI. Momentum, it's sloping up now with that bounce. Or for those of you who are aware of what it is, a Cahold. Okay, looking for a Cahold. Okay, close above the high of the low day, a bounce. That's the possibility of using these things, relative strength, to try and find things, and then trend, support, and resistance. And you can use this as a potential entry on a stock. Now, this is just a sample trade. It's not a recommendation. But if we wanted to, what we could do is we could say, look, I'm going to go back here. I'm going to say, I'm going to go below this low, our recent low, 157.50. And I'm going to put a stop loss underneath that 157.74. That's the low. Actually, I guess the low is 157.80, looking to be exact on that. 157.80. I'm going to multiply that, and I'm going to put my stop 2% below that. I'm going to multiply that by 0.98. Okay? Gives me a 154.64 stop. If I just wanted to enter a trade, a practice trade here on this, I could do that. Right? I can simply right-click on the chart. I could buy custom with a stop. I can just leave that as a limit order if I want. I could put it as a market order if I want. Okay. For my stop, I'm going to make my stop good till canceled. And it's been doing this to me lately. Let me do this real quick. Buy custom with stop. I don't know why it's been doing that, but switch that to market. Stop. What did we say? We said 154.64. 154.64. And I'm going to make that good till canceled. Okay. And I'm going to confirm and send that and put that in as just a practice trade, a paper trade, if you will, to try and take advantage of the overall sector strength. Remember, technology has been killing it lately. The stock has been trending up. Maybe a buying opportunity, perhaps. Now, it may go down from here, I don't know. But our momentum up, we have a close above the high of the low day and a nice little bounce there. So that's a possibility. Okay, just remember, when we're doing relative strength, you can do this on anything you want. So I want to finish up with this. I'm going to look at relative strength. And someone was asking, I forgot, I'd like to give you credit here, but I can't see it right now. What about gold and silver, I think? Relative strength on that. And then we're going to finish up with this. How's gold doing? Relative strength compared to the S&P 500? It was doing great. Lately, not so much. Kind of holding its own. Kind of flat. Silver. How's it doing? Maybe outperforming a little bit lately. And what about oil? How's oil done? Not very well as a whole, as opposed to the S&P 500. Take advantage of that relative strength indicator, folks. I think it's a good way to compare different assets to that S&P 500. All right. Hey, thanks for joining me today, everybody. And thanks to Scott for helping me out in the chat. Appreciate Scott. Coming up at 11 o'clock Eastern time, we have long verticals class. Check that out. Thanks. Make sure you subscribe to the Trader Talks channel, folks, so you don't miss this information each morning and throughout the day. So everybody have a wonderful rest of the day, and we'll see you all tomorrow morning if you want to hit up Trader Talks at the same time. Bye-bye, everybody.